Welcome to this week's video where I discuss what I believe is important for individual investors to think about over the next 5 to 10 business days before they make their investment decisions. We're going to talk about COVID, the resurgence of COVID cases all around the world, and the effects on some of these new restrictions on business. The Fed spoke this past week. What did they say? How much do they anticipate raising interest rates next year, and how will that affect the market? And lastly, technology. Technology seems to take it on the chin every time we hear that the Federal Reserve is about to raise interest rates. Should we be looking at technology as a good investment idea? Stay tuned. Recently, we've seen a resurgence of COVID cases all around the world. We've seen cases rise quite a bit here in Canada, in the United States, Europe, Asia. Omicron seems to be taking over as the dominant variant right now. However, many have said that this may be a good thing. It may be a more weaker strain than the current Delta, and if that's the case, it could be a good thing. Time will tell. However, currently, we're seeing a lot of restrictions being put into place, limiting the abilities of some of these small businesses to conduct business. As individual investors, I think we need to keep an eye on this. Keep an eye on this because as we go forward, we want to continue to buy good quality names that can do well in all environments. So if you want to take a step back from the chaos a little bit over the next 24, 48 hours, I think that's okay. But make no mistake about it. I still believe that if the market were to fall because of Omicron or COVID in general, this is a buying opportunity. Make no mistake about it. I think individual investors can buy good quality names on the cheap going forward, and that's what they should be doing. The Fed spoke this past week, providing information to individual investors about what they believe is going to happen over the course of the next 6 to 12 months. They spoke about increasing tapering much quicker, removing stimulus from the economy much quicker. They also spoke about raising interest rates as much as 3 times next year, something the market definitely doesn't like. Yet what happened on the day that they made this announcement? The market rallied strongly into the close, and we saw gains on the Dow Jones, the TSX, and the NASDAQ. To me, this is something that I think the individual investor should look at positively. This is a sign that the economy is doing well. Even though there's a lot of fear out there due to COVID right now, the underlying demand for products and services really has never been stronger. So looking ahead, perhaps you want to look at investment ideas that can capitalize on a strong economy. Don't be afraid to step into this market and buy good quality names on the cheap. I think individual investors should be looking for good quality, and they can probably get it a lot cheaper today than they did just a few weeks ago. Technology is the sector that we probably speak about most often on these weekly videos. It is the largest component of the largest index in North America, the S&P 500, making up almost 46% of that whole index. So of course, we're going to be speaking about technology regularly. In my opinion, technology can be used as a defensive position in a portfolio. We've seen that over the past few years, as well as an offensive position, or if someone's looking for growth. I think technology being sold off recently because of what the Federal Reserve has said is wrong. I think in times when inflation is higher and we're looking at possibly higher interest rates next year, you want to find companies that can do one of two things. You want to find companies that have pricing power, that can raise prices or raise the cost for the individual to buy their goods or services, pass on that rise in prices to the end user. Or you want to buy shares of companies that are showing fantastic growth, top and bottom line. I think technology meets both that criteria in many cases. You may not want to buy those names that aren't really earning anything at this time, some of those high flyer, trendy technology names, but the good quality, large cap tech names that we've all grown to love, I believe these names can be purchased now, or if you wait a few days. These names, in my opinion, will fare quite well through the tough times in 2022, through the volatility and the eventual higher interest rate environment.